time for your weekly financial workout with your elite personal trainers, Ryan and Bob Payne, guiding you on how to build a stronger and more robust financial plan. So get ready. We're about to pump you up. Live from the greatest city in the world, this is No Pain, No Gain.
Good morning. This is No Pain, No Gain Financial Radio. I'm your host, Ryan Payne, president of Payne Capital Management, along with our chief investment officer, the man with the plan, and my father, Bob Payne. Good morning, Dad. What's shaking on this last November weekend before Thanksgiving? I'm excited you're coming up next week. It's going to be good times.
Right, ready to go. I'm going to fly a little bit of this Florida sunshine up your way to warm things up a bit.
Oh, man, we need it, Bob. We definitely need it. Maybe we should do Thanksgiving in Florida next year. I'm ready for just warm weather all the time. I want to live like Bob Payne.
You know, twist my arm, son. Twist my arm.
Well, we got a great show for you this morning to help you on your path to financial freedom. We're going to talk about end-of-the-year planning. The year is almost over. What proactive moves should you be taking with your planning and investing before January 1st? We're going to talk about your biggest financial fears. Bob and I are going to discuss some of your biggest worries when it comes to financial planning and how you can address them, along with this week's financial propaganda. There's a lot out there in the news media you need to avoid. Bob and I are going to point that out. And on this week's Spotlight segment, we have a very special guest. We have our certified financial planner, Courtney C. Money Dominguez, on the show. She's going to talk about a real retirement plan she worked on, talk about how she helped get a couple retirement ready so you can do all the same things with your own planning and investing. So let's hop to it, Bob. The end of the year is in sight. Once we get past Thanksgiving, it's just going to be a blur. As you know, that's how it goes every year. But I thought this would be a good time just to talk about there's a lot of end-of-year planning you can do with your investments and your financial planning. So, Bob, I think this would be a good time to talk about that. And what are some of the things that we definitely need to be thinking about before year end?
Well, there's quite a few things to do, Rye, especially since we just had a market correction. And you and I just did a conference call with all of our clients and entitled, "A Correction is a Terrible Thing to Waste." Now, one of the things that you can take advantage of in a correction, Rye, is to do some tax loss harvesting. So How does that work? What's the advantage of selling something at a loss?
Yeah, and we call it a tax swap because ideally you sell something that's down in your portfolio and you exchange it for a like investment. That way you can book the loss for tax purposes, Bob, but you're not out of the market because when the market's down, you don't want to be out of the market. You still want to be in the market, but it's nice to have those losses because there's a lot of flexibility you can use around those losses.
Yeah, so you could do that, Rye, with an individual stock, with a mutual fund, with an individual bond. Boy, I started back in 1975, and interest rates went up for the next 10 years. Every year, every bond I bought was at a loss, but we did a swap this time of year because that way we're able to get the same amount of income, have the same position in the portfolio, and we get the IRS, to fund some of our losses in the portfolio. It's a really good deal.
Yeah, no, exactly. And the nice thing is then you get the flexibility of having those losses. So even if you don't have any gains to offset, you can deduct $3,000 against your ordinary income this year. And then, Bob, you can carry those losses forward forever until you use them. So if you sell a real estate property and you have big capital gains on that, you can use those losses from your brokerage portfolio. So just having the flexibility to use the losses as opposed to waiting for them to go away is a really great proactive strategy.
Yeah, well, I think you should take the lead from the president. He lost almost $1 billion in casinos, been carrying that loss forever, and he's able to offset any gains he had in the future up to the tune of like $50 million in taxes he doesn't have to pay.
It's good to be the president, Bob. What can I tell you?
So, Ryan, what other things should we be doing this time of year?
Well, right now it's time to take your RMDs. If you're over 70 and a half, the government is forcing you to take money out of your retirement accounts, Bob. And one thing we talked about last week when we had accountant Jeff Bernstein on is you can actually take a portion of that distribution or all of it and you can donate it to charity for a deduction, which with the new tax laws is a real big benefit that you didn't have before.
Yeah, let's be sure that people understand what an RMD is, right? It's a required mandatory distribution from a retirement plan once you reach the age of 70 and a half. Now, I think a misconception for all of you is you think you have to liquidate your portfolio and then send cash to your bank account. You don't. You can do what's called an in-kind distribution, right? How's that work?
So basically, Bob, you can just take the securities out of your IRA account and then just move them into your brokerage account without selling them, and whatever that value was when they cross from your retirement account to your regular account is the value that comes out for to fulfill your mandatory distribution. So basically, yeah, you don't need to do it with cash. You can move securities.
It's also something you should pay attention to. If you take out of your portfolio what's up the most every year, it leaves what's undervalued in the portfolio to continue to grow. Right, you have clients that you've been distributing mandatory distributions now for the last 5 to 10 years, and the accounts are higher now than when you started distributing it because of that strategy.
It's just, cherry picking what you take out of your portfolio is really critical. The other thing, Bob, is at the end of the year here is if you have a low income bracket this year, maybe you don't have a lot of income showing because you're retired, or maybe you have a loss on your business, you can do what we call Roth conversion. So that's where you can convert money from your IRA into a Roth IRA where the money's tax-free for the rest of your life. And if you're in a low bracket this year, that can be a great way to get money out of your IRA before you have to start taking those mandatory distributions when you're 70
Wait a
and a
minute,
half.
Right? That's music to my ears. Tax-free forever? You mean there's nirvana on earth? There's a perfect account?
There is, Bob. It's called a Roth, and not only does it grow tax-free, but you can take it out tax-free. And where I come from, that's a pretty good deal.
Man, I'll tell you what, you take taxes out of the equation, your portfolio compounds at an extraordinary rate. It's one of the most beautiful things on earth, a Roth conversion.
Yeah, and on the same vein of your retirement accounts, if you're still working right now, make sure that you do max out that account. So if you're having a great year and you haven't put all the money you can put into your 401k, your 403b, whatever your retirement plan is at work, before the end of the year is a great time to get that maxed out and get those tax deductions. So if you're under age 50, you can put $18,500 into a 401k. If you're over that age, you can put an additional $5,500 in. So, bottom line is this is the time to make sure that you're doing all those proactive tax strategies at the end of the year.
Yeah, right. That's great advice. You should be doing that right now. You should be calling your HR department, making sure that you have maxed out the contributions for this year, and make sure that your HR department is aware that you're able to put even more money in next year. For example, if you're doing 18.5 now, you can go to 19,000 next year. A lot of them don't even know that. Just be certain that they take care of you and get that money in early, because with the market down right now, what a great time to buy.
Yes, take advantage of it. And if you're thinking to yourself, these are the kind of strategies I need advice on. I need to know what I'm doing with tax swaps. I need to know what I'm doing with my mandatory distributions. Here's your shot to do it. If you're one of the next 10 callers, you have over $200,000 saved for retirement. Myself and Bob will run for you our famous Total Financial Master Plan, and we'll do that with no obligation or cost. It's a full holistic review where we look at everything, a true financial plan. All you need to do is get those statements, print them off the computer, put them in a brown paper bag, a folder, bring them to the office. We're going to build you your own personalized financial portal, and we're going to do an inventory of all your assets, take a bird's eye view, and look at all the critical components to making sure you're retirement ready. We're going to look at everything from income. Income is so critical in retirement. What's your income gap going to look like when you stop working? We're going to show you how to optimize or increase the income on your portfolio. We're going to look at fees. Yes, there's a lot of hidden fees in investment portfolios. I know that's shocking. Bob and I are going to show where all the hidden costs are in those mutual funds, annuities, brokerage products, show you how to reduce costs on your portfolio. And we're going to look at diversification. How much risk do you have in your portfolio? Did you get hit hard when the market pulled back in the last couple weeks? Do you have a portfolio that's ready for retirement? Bob and I are going to show you where all the pitfalls are in your portfolio and show you how to bulletproof it for retirement. And then we're going to tie it all together into one total financial master plan, utilizing strategies now we have worked on for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
All you have to do is call or text 844-752-6692. That's 844-752-6692. If you're one of our next 10 callers, you've saved over $200,000 for your retirement. Our team will run for you your own total financial master plan. Now, there's no obligation and there's no cost, but of course, there's no plan unless you call or text 844-752-6692. That's 844-752-6692. This is Bob Payne. I'm with my son, Ry Payne, and we are the Paynes of No Pain, No Gain Financial Radio.
It's time for the weekly No Pain, No Gain market update with the team at Payne Capital Management here in New York City.
Good morning. This is Bob Payne, Chief Investment Strategist here at Payne Capital Management. and stocks pulled back this week from last week's big rally. Oil rallied after a steep decline earlier in the week, sent it into bear market territory. And bonds moved up as rates fell across all maturities. Now, investors still appear skittish, as evidenced by large intraday price swings in the U.S. stock indices. The volatility has come as earnings season is winding down, and with nearly 90% of the companies in the S&P 500 reporting, earnings have come in at a spectacular 26% growth rate year over year. And more importantly, revenues improved at about a 10% clip. Now, in spite of these strong numbers, some argue that corporate profits are peaking and likely to taper in 2019. Many other headwinds still persist. Fears over growth in China and around the world, rising interest rates, the ongoing tariff battles between the U.S. and its trading partners. Almost 30% of those companies that reported this quarter had mentioned tariffs on their earnings call. And as a result of the midterm elections, many believe fiscal stimulus will now slow or stall in the House of Representatives. You know, this doesn't sound very promising. But the thing about risk is that much like science or facts, it exists whether you believe it or not. Corrections are simply price adjustments to the current market environment as investors acknowledge risk. Now, this year has been much more challenging than last year, where investors ignored risk, and we had 12 consecutive months of gains with little or no downside volatility. But volatility also has a positive effect on financial markets. The roller coaster ride of 2018 has shaken investors out of their complacency and brought valuations as well as volatility back to what's simply historically normal across all asset classes. And as asset prices decline, the expected return from that asset class goes up. And that's why a balanced portfolio approach based on your goals, based on your risk tolerance, is so critical. When the melt up inevitably comes, you need to be in it in order to win it. Now, of course, the thing about roller coasters is they can be scary and fun all at the same time. Now, if you're sitting there wondering, do I have a portfolio that's based on my goals, that's based on my risk tolerance in this very volatile environment? Why sit there and wonder when you could know? Give us a call or simply text 844-752-6692. That's 844-752-6692.
This is No Pain, No Gain. Now, back to the show.
It's Ryan Payne, Bob Payne. No Pain, No Gain Financial Radio. And Bob and I want to make sure you have the best advice to make the best decisions about your finances. And that's why we put together our highlights from the new tax law, just to give you a refresher, a reminder of some of the new highlights to make sure you're doing everything from a tax perspective that you can be doing. You can download it for free. Simply text the word bullish, BULLISH, to 555-888. That's texting the word bullish to 555-888. You can download for free the highlights from the new tax law. Taxes around the corner. Make sure that you know all the new ins and outs, how it affects you, how you can save on taxes. You can download it for free. Simply text the word bullish to 555-888. That's the word bullish to 555-888. So, Bob, we've been talking to a lot of our listeners and clients about a lot of what their biggest fears are when it comes to putting together their financial plan. So I thought it would be a good idea to discuss some of the bigger anxieties that we see when it comes to building that wealth plan. And I think the big one always is, I'm afraid that I'm going to run out of money before I'm not on God's green earth anymore.
Well, Rob, we get a lot of that. A lot of people think of, maybe it's illness or it's death or it's global warming. These are the things I worry about. But the biggest concern you have is becoming a burden on your children and running out of money or ending up as a street person. So, that is a great fear, and it's a motivating fear. But unfortunately, some people don't do anything about it, right? They sit there and worry about it. What are some of the things you can do to make sure that you're not going to run out of money in retirement, right?
Yeah, well, I think it's like the devil you don't know is always worse than the devil than you do. So I think just sitting down and taking inventory and putting together a financial plan, as intimidating as it sounds, Bob, is the first step. And I think that first step is just tailing up your assets, right? Getting an inventory of where everything is, because we find a lot of times you forget you have accounts in lots of different places that you totally forgot about.
Well, I had a client the other day. We called about some annuity that he bought through Merrill Lynch years ago. And we called the insurance company, and they start telling us about this other investment. We said, no, you must have the wrong client. He says, no, this is the right client. This is your social security numbers, your address. We found $125,000 that the client didn't know about.
Huh. I think you were telling me about this, and what was he getting on that $125,000? A very low rate of return,
big
right?
whopping 1.5%.
And that's the other thing I think it's really important is you got to make sure that your assets are productive. So if you don't know where your assets are and you don't know what they're doing, you don't know if they're working for you or working against you for retirement. Let's face it, Bob, if you're getting 1.5% on your money with the cost of living going up every year, your client was actually losing money because that just doesn't keep up with what things are going to cost 5 years from now, 10 years from now. So it's so key that he found that money and gets it working as his ally.
That's the biggest risk to your retirement is inflation. It's hidden, it's insidious, it's constant, and it compounds against you. You have to be certain that your portfolio overcomes inflation. That's the number one rule of investing, and that's what diversification is all about, Rye.
Which brings me, Bob, to another big concern that we have is once we tally everything up, we put our plan in place, you think, okay, the day I retire is the day the market's just going to have a big downturn. I'm going to lose like 40% of my portfolio and I have to go right back to work, right? So that's another fear that I find is very common.
Oh, it's a huge fear, right? It's just, people think, what happens if I retire right as there's an epic top like 1929 or the big Great Recession of 2000 or 1973? And, here's the thing. If you have a diversified portfolio, say 60% in stocks and 50% in bonds, the news is really good.
Yeah. No, and I think that's another important point, Bob, is what does your portfolio look like today? If you're getting ready for retirement and the last couple of weeks we've seen the market have tremendous volatility, and if your portfolio is not prepared for that kind of volatility, if you're getting close to retirement, this is a real wake-up call to say like, hey, you have to have bonds in your portfolio. You can't have the same portfolio you had 10 years ago. And we know people in 2008 that did retire, and because they didn't adjust their portfolio to make it retirement ready, they did lose a lot of their money and they did have to go back to work. So those problems are real. Those fears are real, and I think that's why it's so important to start to build your portfolio differently as you get close to retirement, Bob.
Well, this analyst just went back, Rye, and he looked at the family history over the last 100 years. And if you put $1 million in at the absolute tippy top before the crash in 29, or before the downturn in 1973 or the downturn in 2000, if you put $1 million to work over the next 30 years, taking out 4% a year to fund your retirement, guess what the results were?
You still had $1 million left.
You had more than $1 million, plus you took out over $1 million. And the biggest risk wasn't market volatility. It was inflation. So if anybody kept their money in cash or tried to get caught up in market timing, they failed.
Yeah, that's the whole thing, right? I mean, if you don't have a strategy that you're sticking to and you are with the whims of the market, do I get in, do I get out? I mean, that can have a huge negative impact on your portfolio. Another thing to think about when you're getting close to retirement, I fear that I find is, are you working with an advisor that really has your best interest at heart? Am I just working with a stockbroker? Or am I with somebody that's going to get me through the journey of retirement?
Ryan, you would think with Bernie Madoff and American Greed that's on every night that people would be aware that there are charlatans in this industry.
I don't believe it.
I just got an email from our attorney, and he's got a case with a trust company where this person's been churning this person's account now for 20 years, buying high commission investments, churning the account. The advisor made more than the client, and they lost money every year for the last 10 years.
Yeah, and I think that's especially as you're getting close to retirement, the stakes are higher. Even if you like your advisor, why not get a second opinion, right? Just make sure you're doing everything right. Another thing you want to consider, too, is consolidating. If you have 2-3 advisors, it's not really effective if you're trying to get one financial plan for retirement. Because if you have 2-3 different people giving you advice, Bob, what happens is you end up with what we call this collection of investments as opposed to a concerted plan that's going to help you to achieve your goals, into and through retirement.
Well, that's why our clients love our 360 financial portal so much, because it allows them to keep assets custodied wherever they wanted custody. They want to diversify their assets by having it in different custodians. They don't have to consolidate everything under one advisor, but they can view it on a daily basis, make sure they know where everything is. I mean, look at my client. He had $125,000, didn't know it. And if he passed away, who knows what would have happened with that money?
Yeah, no, exactly. And that's where I think, with technology today, we talk about this a lot. There's a lot of easy steps you can take. Number one, just like getting things consolidated into one viewing platform where you have one password, because nothing is worse than having to reset all those passwords, go in and look at all those different values. You're not really getting that bird's eye view, which I think is really critical. Because the other thing, too, is once you have everything loaded into one place, Bob, and this is where a lot of the fear comes in, you start worrying about, well, what if I have medical costs, right? What if I'm in a nursing home? How's that going to affect my portfolio? Well, the nice thing is, if you have a financial portal, is you can play all those what-if scenarios, and you can look at worst-case scenarios, and that really creates a lot of peace of mind when you know what those situations could look like.
Rye, I think that if you're sitting there thinking right now, I need to be financially organized, I need to be financially healthy, I need to know what I own in my portfolio is appropriate. I need to know what I'm paying. I don't want to be overcharged. Well, here's your opportunity. If you're one of our next few callers and you have saved at least $200,000 for your retirement, our firm will run for you a total financial master plan. Now, there's no obligation or cost. It's a full holistic review where we look at everything, gather all your statements, put it in a folder, stick it in a shopping bag. We're going to review everything with you and build your own personalized 360 financial portal that will allow you to review your portfolio on a daily basis in real time if you care to. You'll be able to look at your net worth. It'll update everything in real time on a daily basis, not just your assets, but also how you're progressing towards those goals. In addition, we're going to analyze your portfolio and break it down into the three key elements of a successful strategy: diversification, cost, and income. We want to be certain you don't have any hidden costs in your portfolio, buried deep in that prospectus or in that huge annuity contract. We want to look at diversification. We want to be diversified across asset classes and within asset classes. And lastly, you want to be certain that you fill that income gap that you have when you're retired or when you're about to retire that everyone faces when they're no longer collecting that paycheck. And lastly, we want to answer that age-old question. Are you going to outlive your money? Or is your money going to outlive you? Utilizing strategies that my family's been perfecting now for over 4 decades. For 40 years, we've been helping families like yours get from your financial point A to your point B, to your goals, to your dreams, with the least amount of risk and the highest odds of success.
So don't waste time. Call or text now at 844-752-6692. That's call or text 844-752-6692. Here's your shot to get that second opinion to make sure you're on track at 844-752-6692. That's call or text 844-752-6692. If you're one of the next 10 callers, you have over $200,000 saved for retirement. 844-752-6692. That's call or text 844-752-6692. This is No Pain, No Gain Financial Radio. It's time for Financial Propaganda of the Week. This is where Bob and I scour the daily financial news and call it the biggest offenders of offering obscene and profane financial guidance to help you protect yourself from making any ill-advised financial decisions. So, Bob, what did you find out there this week in the hard world of financial propaganda?
Well, I found really bad news for financial propagandists, right?
Oh, no. Do tell.
Their favorite stock market crystal ball may have a crack in it. It turns out that there are a lot of people out there telling you that they have one indicator that will predict the future. Well, let me just clarify. There is no one that can predict what's unpredictable and know what's unknowable. And, what you see every single day is an article talking about someone who predicted some downturn in the past is now saying, well, it's going to really get bad this time. Ryan, there are things called perma bulls and perma bears. And when you have a perma bear, what's that mean?
So perma bear means you always think the end is near. Right? We're always going into a recession. The market is always ready to fall off a cliff. Like, that's always your viewpoint, basically. Yeah,
so last week you had quite a few of those same individuals highlighted in the financial propaganda about how they predicted this last downturn, which has only been a correction. Of course, you go back and over the last 10 years, they've been predicting the same correction, even though the market went up 350%.
We have a saying for that, Bob: a broken clock is right twice a day. So eventually you're going to be right, but you have to be wrong a lot before you're right.
Well, you learn about a lot of different terms that you don't need to know about. Some things called Hindenburg omens and, junk bond credit spreads. If it worked once, they think it has predictive power. But in any correction, in any drop in the market, the only way to know the actual reason why it happened is about 6 months from a year from now, you'll actually understand why. So it doesn't do you any good to predict things that can't be predicted.
That's a good point, Bob. But guess what? Our friend Kramer from CNBC,
Yes.
he was from Philadelphia as well, by the way.
He is a Philly boy.
He has said this past week that he has 3 cardinal rules for investing during a bear market. So what Kramer's saying is once the market has fallen off the cliff, things are going terribly now, he has a strategy for you, Bob, that I think is going to work, or maybe not. So his 3 cardinal rules start with, I'm going to tell, is focus on individual companies. He says if you examine individual companies and think about what represents value, you can do better. So he gave an example of Home Depot. So he's saying when the market's down, if you just pick the stocks that have value. Now, Bob, I'm going to go out on a limb here and say it's impossible to figure out which stocks are going to have the most value and not have the most value when the market finally recovers in a bear market. That's crazy.
Well, if you go back, and I go back almost 45 years in this industry, right? Back in the 70s and the 80s and the 90s, what do you think the most popular holding was of every investor out there?
General Electric.
Yes, big old GE, right? What could be a better company? What could be more blue as a blue chip? Now that stock's trading about $8 a share. They've cut their dividend. They're losing money. It's the worst performing stock in the Dow over the last 10 years.
Yeah, no, good point. So if you would have used that strategy of, hey, General Electric is a great quality stock, I'm going to buy it every time it's down, well, you'd still be losing money, Bob.
Exactly. And it's, individual stock speculation. That's exactly what it is. It's speculation. And that's the one thing I really don't like about shows like Mad Money, Fast Money. It's not a game. Investing is hard. Investing is serious. And you can be a successful investor if you diversify the risk out of your portfolio to the best of your ability. Speculating on, whether raindrop A is going to drop down on your window faster than raindrop B is a waste of time, and it also can be very costly to your portfolio.
Yeah, and that's the problem, too, of these shows like this. Jim Cramer specifically talks about diversification, and when you have like 3 or 4 stocks. That is not diversification, right? The Payne Capital Management definition of diversification is having like thousands of stocks. So how could 3 or 4 stocks possibly be diversification? We live in a world where, Bob, we talk about this all the time, and you and I are victims of this, is I don't care how great a company is. If you work there, if you have the inside track, it doesn't matter. Marketplaces change. Unforeseeably, marketplaces change. Management teams change. Any company can go to zero. And let's face it, I worked at Merrill Lynch, Bob. You worked at Merrill Lynch. I was there when they basically went bankrupt, and no one was calling me to let me know ahead of time that things were going awry.
Wait a minute. You worked in the same tower as the senior executives of Merrill Lynch. They were right outside your office. They didn't come in and tell you that their balance sheet was leveraged 35-1, that they were losing their shirt in subprime mortgages.
I'm a little hurt.
I don't get that, right? I mean, weren't you an insider?
I mean, I'm a little hurt I wasn't invited up to the, I forget, the 40th floor, wherever it was, to be given that, some inside information on those type of things. But point is, even when you're in a company, you can't really foresee. And a lot of times I argue when you're in the company, sometimes you're so close to it that, you're even less informed in a lot of ways.
Well, let's be clear about something, Rye. Any stock can go to zero. Any company can go under, no matter if it's a 100-year-old company like Merrill Lynch or an institution, blue chip institution like GE. You can have that company could actually go to zero. But has the stock market in the United States ever gone to zero?
Not in my lifetime yet, Bob.
No. So, the whole idea is to own the market, is to invest in a diversified portfolio. Don't own individual stocks. And when it comes to fixed income, which is really the only true hedge you can have, and the only true hedge you can have is have a high-quality bond that pays you interest and then has a maturity date where you get your money back and you get to reinvest that money, when markets are either higher or lower. That's the only true hedge there is. Anything else is just noise as far as I'm concerned.
Yeah, and just one other point on that too is I think the other thing we look at is I'll follow the analyst report and they'll give me some guidance on when it's time to get out of a stock. But the reality of it is they always get you out too late. Like nobody was telling you to sell Facebook when it was at its high, right? But as soon as it dropped 20%, all of a sudden analysts started saying, well, maybe it's not such a great buy anymore. So, there's no signal out there that's going to, just tell you this is the perfect time to get out of a company before it goes down as well. So just another misconception.
So you all want to be an investor, not a speculator. Speculators are no different than the people that go down to the Atlantic City casinos, and bet on red. That's not investing. That's gambling. Don't turn your portfolio into a casino. Turn it into a long-term strategy that'll give you a lifetime of income you can't outlive.
Yeah, so if you think to yourself, I'm gambling, my portfolio looks like a casino. I like that, Bob. Here's your shot to get a second opinion. Make sure your portfolio is doing what it should be doing, getting you ready for retirement. If you have over $200,000 saved for retirement, you're one of the next 10 callers. Bob and I will run for you our total financial master plan, and we'll do that with no obligation or cost. It's a full holistic review where we look at everything, a true financial plan. All you need to do is print those statements off the printer, wait till they come in at the end of the month, put them in a folder, bring them in the office. We're going to go through all of it for you. We're going to build you your own personalized financial portal. And we're going to take a bird's eye view, and we're going to look at everything. We're going to look at all those critical components to your portfolio. We're going to look at your diversification. Are you diversified? Do you have a lot of individual stocks? When the market went down the last couple weeks, did you feel the pain? No pun intended. Bob and I are going to show you how to bulletproof your portfolio, make it retirement ready. We're going to look at fees. There's a lot of hidden cost in investment portfolios that you don't know you're paying. We're going to break it all down for you. We're going to look at those high-cost mutual funds, those annuities, insurance products, brokerage products. We're going to show you where the high cost is and how to reduce fees on your portfolio. And we're going to look at income. Income is so much more reliable than capital appreciation. Bob and I are going to figure out what your income gap is, what income you have to replace in retirement. We're going to show you how to optimize or increase the income on your portfolio. Then we're going to tie it all together and determine that age-old question, are you going to outlive your money, or more importantly, is your money going to outlive you? Utilizing strategies now we have worked on for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
All you have to do is text or call 844-752-6692. That's 844-752-6692. If you're one of our next few callers, you've saved over $200,000 for your retirement. Our team will run for you your own total financial master plan. Now, there's no obligation, and there's no cost, and there's no strings attached. But of course, there's no plan unless you call or text 844-752-6692. That's 844-752-6692. This is Bob Payne. I'm with Rye Payne, and we are the Paynes of No Pain, No Gain Financial Radio.
Hi, it's Ryan and Bob here, and we want to talk to you about your cash. Bob, many of us are sitting on a lot of cash right now in our businesses and personal savings accounts, and rest assured the banks are taking full advantage of our dormant cash.
That's right, Rye. Not only do you have to worry about FDIC insurance limits, but most savings accounts pay close to 0%.
Exactly right, and that's why we're putting together short-term CD ladders so you can have increased FDIC coverage, and not to mention rates that are in many cases double what your local savings and local checking accounts are paying.
If you want to learn more about how to manage your cash better, simply text the word cash, that's C-A-S-H, cash, to 844-752-6692. That's text the word cash, C-A-S-H, to 844-752-6692.
Ready for what Bob and Ryan have to say next?
All right, everyone, gird your loins.
Let's find out.
It's Ryan Payne, Bob Payne, No Pain, No Gain Financial Radio. And Bob and I want to make sure that you always have the most common sense, practical advice if you're planning and investing. And that's why we put together our latest guides, the highlights from the new tax law. It's just a free guide to give you the updates on all the new tax reform that happened this past year. You can download it for free. Simply text the word bullish. That's bullish, B-U-L-L-I-S-H, to 555-888. That's the word bullish to 555-888. You can get a free copy of our highlights from the new tax law. Simply text the word bullish to 555-888. That's the word bullish to 555-888. And if you ever want to learn more about myself and Bob, and yes, Bob's hair is real, but check it out for yourself. Go to BeBullish.com. That's BeBullish.com. You can subscribe to our show and get more timely information from No Pain, No Gain and Payne Capital Management. And most weeks, you can catch most of our financial advisors on all the major networks talking about our views of the markets, the economies. And if you ever have a question you want to ask myself or Bob, you can just email us, questions@BeBullish.com. That's questions@BeBullish.com. It's a really good question. Bob and I will answer it right here on the show. And like every week, we had some pretty good questions. And we have our in-house producer, Mark Haywood, to answer these questions for us this morning. Good morning, Mark. How you doing?
Gentlemen, a pleasure as always. I'll tell you what, I'm doing my stretching exercises to prepare to eat more next week. That's what I'm doing this morning.
I like it, Haywood.
Out of the closet.
This is a glorious time of year, let me say, where from now through the new year, you just have an excuse to eat all the snacks. Of course, then you spend the next 4 months trying to work it off, but it's worth it right now.
Yeah, no, it is going to be definitely a feast. I'm glad you're doing your stretching ahead of time.
Well, before we can get to the feasting, we do need to take a couple of your questions this week. The first one comes to us from Laura in White Plains, New York. Laura says, Bob, I'm 56 and I've been working at the same company for 32 years. I'm so tired of being here and I want to retire, but I'm still a few years away from being able to take money out of my retirement accounts. Am I just stuck for a while?
You know, Laura, that's a great question. And it's a question our clients and a lot of folks who call into the show ask us all the time. You know, can I retire early? Can I get the heck out of this company? Do I have to put up with my boss anymore? Well, the answer is maybe. And just like you, everyone should have an A to B wealth projection done to see if you've saved enough, if you have a budget that you're able to, grow your assets and overcome inflation and taxation to fund that budget. But, Rye, I think retiring at 56 is fraught with enormous risks. And what are some of the reasons why Laura should rethink this strategy?
Well, it depends. I mean, if you're in your peak earning years right now, right, and if you don't have to touch your portfolio for a couple more years, that compounding effect can be tremendous, right? Because the whole idea is, and that's why we talk about income a lot, is compounding your money is a real key component, Bob.
Oh, it's huge because not only are you still, compounding that interest and dividends that you're not spending, but you're still contributing, to your 401k. For example, next year, Laura could contribute $19,000 plus the catch-up provision. And, if you work for another 5 or 6 years, that's an enormous amount of money to fund that retirement. But what about longevity, right? I mean, what happens if Laura lives to her 90s and lives to 100?
Yeah, what we're finding, especially for women who actually live longer than men, is you have to not only be concerned about longevity in the sense that you have more years to plan for, Bob, but there's also higher odds that you're going to have some sort of medical expenses that are unexpected. So the good news, bad news of living longer is, good news is you're living longer. Bad news is there's probably going to have to be more planning around additional expenses for medical costs that you didn't have to plan for back in the day, right? Our parents didn't have the same issue.
Yeah, and sometimes you find out that, if I retire early, maybe I could just do some consulting or get a part-time job. But all of a sudden, you're getting paid a lot less. You're a lot less valuable in the eyes of a future employer. You've earned over 32 years. You have a lot of experience. You're worth a lot of money. And it's sometimes very difficult, almost impossible to replace that income that you're getting paid on your human capital. So I would say, Laura, your best bet would be to suck it up, stick it out for a few more years. Let's get that analysis done. It's one thing to want to retire early. It's another thing to know that you can. And when you go to work every day with that attitude is, I'm set for life. You need me more than I need you. That is one of the greatest, most empowering feelings in the universe, Rye.
Couldn't agree with you more, Bob.
All right, well, thanks for writing in, Laura. Let's take another question now from Harriet in Morristown, New Jersey. Harry writes in, Ryan, my brother tells me that I have way too much money in the bank, and he's probably right. It's about $150,000 now, but I just like knowing that it's there in case I have an emergency. Is that really so bad?
Yes, it's bad, Harriet. No, not necessarily. I think, well, first off, I think you always have to have money in cash, right, Bob? Our rule of thumb is always 6 to 12 months worth of expenses in cash is key to have depending on your comfort level. But Bob, this reminds me of your client that you found that $150,000 annuity out there that was earning 1%. There comes a point where you need your assets to be productive.
Absolutely, right. And it's, it was funny because I was talking to the client. He said, well, you really think we should move it? And I said, well, let me ask you a question. Let's do a pop quiz. Is 4% better than 1%? He said, okay, you can have any tough questions? I said, oh, here's a tougher one. Is 4% tax-free better than 1% taxable? He says, okay, get the paperwork over here and stop being such a wise guy. The point of the fact is that, everybody can use more income. If I can double the income that I'm getting on an investment or triple the income on that investment, why wouldn't I? I can think of 1,000 things that I can spend money on now between now and the end of the year, right?
Yeah. No, and this is a big deal right now specifically, Bob, because I noticed there's a good chance, you're sitting on a lot more cash than you used to. We found since 2008, a lot of us got burnt with the stock market. We never ended up getting all our money back to work. And now putting your money back to work doesn't mean it all has to go in the market. Like, Bob, you just mentioned tax-free bonds right now are very attractive on their yields. Point is, in a diversified portfolio, you're going to generate a lot more income than sitting in cash. And why that's important is, Bob, if I'm getting, what's the best money market fund in the country paying right now?
Well, probably 2% if you're lucky.
Yeah, 2% if you're lucky. Well, the first buzzkill is you got to pay taxes on that 2%. So maybe after tax, you're really getting 1.5%. And Bob, what's inflation been since World War II?
And inflation has been 3.1%, even though it's only currently running just above 2%. Yeah. But even if it's 2.5%, that's a negative return.
Every year, right, on average, you're losing about 1.5% on your money sitting in cash or in a money market fund, earning that high yield, quote unquote, of 2%. So that's why it's just so important to know where all your money is, know how much you need in an emergency fund, and again, the rest of the money needs to be compounding, working for you for the long term.
Ry, I think it's, Harry, it's like a lot of you out there, it's not so much that, you have this fear of volatility. It's just that you just don't know. And you don't understand, what it means in the context of an overall plan because you've never done a plan. So, Rod, let me ask you a question. On a scale of 1 to 10, in terms of being financially organized, where would you place Laura and Harriet?
Well, I'm not feeling benevolent this morning, Bob. I said they're both a 2.
Ooh, that's pretty bad. So let me ask all of you, on a scale of 1 to 10, how financially organized are you? Wouldn't we all want to be a 10? Wouldn't we be proud to tell our families that we're a 10 in terms of being financially organized? Well, if you'd like to be that person, all you have to do is be one of our next few callers, especially if you've saved at least $200,000 for retirement. We'll create for you your own 360 financial portal, which will get you financially organized. It'll be one place, one holistic view where it'll illustrate everything you own in real time, updated on a daily basis. But more importantly, it'll articulate your goals and show you how well you're progressing towards those goals and what percentage you have yet to go. It's a reminder of whether you're set for life or whether you have a little bit more work to do. If you're one of our next few callers, what we're going to do for you is we're going to take that portfolio and we're going to break it down into the 3 key elements of a successful strategy. We're going to make sure that you're truly diversified, not just in a couple of stocks, but across the stock market, across the bond market, to give you the only true hedged portfolio that you can have. And that's a portfolio of bonds that come due, that mature, and give you all your money back. We're going to look at your fees. I don't know about you, but I don't like to be overcharged by anyone or any institution. And it certainly would upset me to know that my portfolio is overcharging me on an annual basis. And lastly, we're going to look at your income. We want to increase your cash flow. Most of you are taking way more risks than necessary to achieve your goals, and you haven't really adequately analyzed whether you're going to fill that income gap that we all have while we're retired or before we're retired. And finally, we're going to tie it all together into one total financial master plan, answering that age-old question. Are you going to outlive your money, or is your money going to outlive you, utilizing strategies that my family's been perfecting now for over 4 decades? That's right. We've been helping families like yours for over 40 years get from your financial point A to your point B, to your financial goals, your dreams, with the highest odds of success and the least amount of risk.
So don't waste time. Call or text 844-752-6692. That's 844-752-6692. We still have a couple slots left. If you have over $200,000 saved for retirement, that's 844-752-6692. That's call or text 844-752-6692. Here's your shot. Get a second opinion just to make sure you're on track at 844-752-6692. That's call or text 844-752-6692. This is No Pain, No Gain Financial Radio.
Here's this week's Spotlight on No Pain, No Gain.
It's Ryan Payne and Bob Payne. No Pain, No Gain Financial Radio. And Bob and I, we're simple men, so we like to keep it simple for you. And that's why we put together our latest guide, highlights from the new tax law, just to get you up to date on the new tax reform. You can download it for free. Simply text the word bullish. That's bullish, bullish, to 555-888. That's the word bullish, to 555-888. You can get our update, find out all the new things you need to know about the new tax reform, our highlights from the new tax law. You can download it for free. Simply text the word bullish. That's bullish, bullish, to 555-888. That's bullish to 555-888. And now it's time for our Spotlight segment, where we have a very special guest, our colleague, Courtney C-Money Dominguez, certified financial planner. Good morning, Court. Thanks for being on the show.
Thanks for having me.
Always a pleasure.
Always a pleasure.
And you worked on a case this past week, and this is our Spotlight segment where we actually take a real case and talk about, how we helped a couple or a person get on track with their investing. So why don't you talk about the latest case that you worked on?
Well, yeah. Now, this case here, just to give you a little bit of background, is somebody who's retiring actually about a week from now. So this is an exciting time in their life where they're going from accumulating their wealth into now they're retiring, and they're saying, well, I need to make sure I'm protecting my assets at this point.
Yep.
And his biggest concern is he says, well, my wife is about 10 years younger than me, and our son is only about 10 years old. So I need to make sure that they're taken care of as well, not just me in my lifetime. And I hear this a lot.
Yeah, so you kind of have, he's ready for retirement, but he has to really invest these monies for longevity because he has a young family, basically.
Exactly.
Yeah.
You got it. Now, when
And the
I
last
took a
thing
look
you
at
can
his...
afford to do is lose a lot of money in the market, wouldn't you say, Courtney?
Exactly. Which, unfortunately, the way that this portfolio is set up is extremely aggressive, almost 100% in the stock markets with no downside or safety protection in there.
Ouch. Well, I think
Let
this
me get
last
this
week...
straight. He's 10 years old?
He's not. That would make the sense, though.
So he felt the pain, no pun intended, this past couple weeks in the market with it coming down significantly.
Exactly.
Yeah.
Now, one thing that we always look at when we're talking to clients, and really, especially as we're retirement planning, is their income gap. And that's usually something that we find with people where they're not necessarily having enough income to sustain their lifestyle in retirement. Now, this client specifically is very fortunate that they have a large pension. So he actually didn't have an income gap necessarily.
Okay.
So we're looking at his portfolio and he's saying, well, do I need all of this extra income coming in if I don't need it because I have a pension? So why not just be in the growth stage right now?
Right. But the problem is if something happens to him, something happens to his pension, and then his wife and son are fending for themselves. So it's really, this money has to be invested for their goals, not just his goals.
Exactly. And last month was actually a perfect example of why you need all that income coming in. Because right now he's heavily invested in your big U.S. companies, which kind of led the market sell-off last month. Now, if you have your interest and your dividends that you're collecting, you get this compounding effect where maybe you don't need the income, but you can use that to reinvest. And now you're going to have more shares in your portfolio, and then you can reinvest those down the line and so on and so forth. And there will be times like last month where the markets aren't in our favor, but if you have this consistent income coming in, especially if you don't need it, you can just use it to your advantage and make sure you're able to grow your wealth over your lifetime, regardless of what the stock markets are doing.
Yeah, no, and it's huge here. I'm looking here. You're able to increase the income to like over $20,000 a year from a couple grand a year. I mean, that's a major difference in compounding your money.
Exactly. And especially retirement, it just adds a lot of peace of mind that even if the markets aren't on your side, you have all this consistent cash flow coming in that you don't necessarily have to worry so much about the stock markets, where right now that's what he's solely dependent on.
And income is very consistent. You earn income every day. Capital gains come in spurts, as do capital losses.
Yeah, and I mean, after these last couple weeks, too, I mean, why would you want to go into retirement and happen to be worrying about what's the stock market going to do every day, right? I mean, it's like we were at a peak in the stock market only a month ago, and with a snap of a finger, we've had this severe correction. You know, why would you want to have to live and die with that when you're starting to look at living off of your portfolio? It's just, to me, a crazy way to want to live, especially in retirement where you really want to have peace of mind, I would think.
Exactly. And
It seems like they just met you at the right time, Courtney.
Couldn't have been a better time. Yeah, and especially
Never
right
a wrong
now.
time to work with Courtney C. Money Dominguez. I'll just put that out there.
I'll tell you, never a wrong time. Yeah, especially nearing retirement, it's a great time to look at this. But especially right now, we're getting a lot of people questioning, am I invested properly? Because I would say most people who come to us tend to be heavily invested in these big U.S. companies because it's the things they know and they recognize.
Yes.
But that, especially last month, it's getting a lot of people to rethink about that and saying, maybe that's not in my best interest since that really had a big sell-off and it can hurt you. You can see in just 1 month how significantly that can affect things.
Yeah, having your money concentrated in any area, it's the old proverbial saying, you live by the sword, you die by the sword.
And at the end of the day,
there's an old Bobism. Markets operate and time passes. And all of you have portfolios that are operating. And as the market's gone up dramatically in the last 10 years, you tend to become more over-concentrated, overweighted in stocks, unless you have someone who does this type of review for you every year. And so the whole thing about planning is it's living, right, Quirt? I mean, as a certified financial planner, you plan out this portfolio and this plan for this client, but you're also going to update it every year to make sure they don't take any unnecessary risk going forward.
Exactly. That's the thing. You have to have a plan in place because we don't know when the stock markets are going to do great or they're going to do poorly, but we just need to make sure that you're set up so that you're not going to be out of luck when the markets aren't in your favor and you are getting that growth when the markets are recovering. And it's just so important to make sure whatever stage in your life you're in, whatever longevity you're planning for, that it's very specific to you and your goals.
Yeah, exactly. Financial planning is very personalized. And great job in this case, Courtney. Excellent job. Another, as Bob would say, financial masterpiece. And if you're thinking to yourself, this is the kind of review I need. I may be taking way too much risk. I need to generate income. I need to make sure that my family's protected. Here's your shot to do it. If you're one of the next few callers, we still have a couple slots left. You have over $200,000 saved for retirement. Myself, Bob, Courtney C. Money Dominguez will run for you our total financial master plan, and we'll do it with no obligation or cost. It's a full holistic review just like this. All you need to do is print those statements off the computer. They come in at the end of the month, put them in a folder. We're going to go through all of it for you. We're going to build you your own personalized financial portal where we're going to take a bird's eye view and take a holistic view of everything and look at all these critical components. Like income, we are able to increase the income on this portfolio to over $20,000 from a couple $1,000s. How can we help you optimize or increase the income on your portfolio? We're going to look at diversification. How much risk do you have? Did you get hit hard in the last couple weeks as the markets have been very, very volatile? Is your portfolio protected? We're going to show you how to bulletproof or make your portfolio retirement ready, and then we're going to tie it all together and determine that very critical question. Are you going to outlive your money, or is your money going to outlive you utilizing strategies now we've been working on for over 4 decades to take your family from point A to point B with the least amount of risk and the highest odds of success?
Hey, don't miss out. We have a few spots left. All you have to do is call or text 844-752-6692. That's 844-752-6692. If you're one of the next few callers, you've saved over $200,000 for your retirement, our team will run for you your own personal total financial master plan. Now, there's no obligation, there's no cost, no strings attached. There's no plan unless you text or call 844-752-6692. That's 844-752-6692.
Another great show, and rumor has it, Courtney, you're going west for Thanksgiving.
Oh, I'm trying to get out of all this cold snow, I'll tell you.
The West is the best, I think Jim Morrison said, Bob.
I think he might have been right about that, but you know what? There's no place like home on Thanksgiving.
Absolutely.
Couldn't agree with you more.
Well, everyone have a great rest of the weekend, and as always, be bullish.
Information provided on today's show is provided for information purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with an investment, legal, or tax professional before taking any action.